Hello there. Well, it's that time of year where everybody makes their predictions about what's going to happen in the coming 12 months. Well, we're not going to do that. And if you want to know why we're not going to do that, you need to read the written version of the Pulse, where we look back at some of the people's predictions for what was going to happen over the last year, and then we look at what really happened. But if we look going forward, sort of to summarise, shall we say, most people seem to think that over the next 12 months, the economy will remain fairly strong, that inflation will remain roughly where it is now, maybe slightly above the sort of 2% mark we'd like it to be, but not too bad. And most people think interest rates will be cut. Maybe on the consensus is they might be cut 4 times, 0.25% each, so a total of 1% cuts. And then generally the consensus is that the stock market will continue to go up and should have another very good year. So again, got no kind of reason to disbelieve any of that. Maybe that will be right. What I would say is I'm almost certain that something will happen that we didn't predict that will come along and affect some of those predictions, whether that's for good or for bad. So we don't like to make predictions because clearly, there are so many things that could happen. But what we do like to do is look back at history and look at data and see if we can make any kind of assumptions about how markets might behave. So for example, one thing we know about stock markets is that they tend to be volatile, and that very frequently you tend to get a 5% fall, maybe at least once a year. You tend to get a 10% fall in stock markets at least once every kind of couple of years, and maybe a 20% fall or more maybe around every sort of 5 or 6 years on average. Now, of course, those are averages. Sometimes those things can be much closer together. Sometimes they can be further apart. But we know that markets do tend to be volatile. We don't know when those periods of volatility will happen, unfortunately. But we just suspect, given we've not really had any sort of drawdown in the stock market, it's possible that there might be one over the next 12 months or so. One thing we will say, though, is that we think the next sort of 10 years, not talking about the 12 months, but just over the longer term, the next 10 years I think will probably be very different from the previous 10 years. If we look over the last 10 years, stock markets, particularly in the US, have done really, really well. Bond markets have done really, really badly. We strongly suspect that the next 10 years could be different. Maybe bonds, having had a very bad 10 years, actually might have a very good one. And they're certainly starting with a much higher yield than they had a few years ago. And the yield tends to, in the past at least, has given us a pretty good indication of what returns might be. If we look at the stock market, over the last the last decade, it's done very well. But it's now a lot more expensive than it was 10 years ago. If we look at the US market, which is one we've talked about quite a lot recently, it's perhaps 50% more expensive than it was 10 years ago. So we would suspect that it probably won't do as well as it did over that period. But hopefully portfolios as a whole can still do quite well, because if we put a bit more in the bonds, which look a bit better value, a bit less in the stock market, which looks a little bit more expensive, we can hopefully still end up with a decent return. So that's the way that we will always try and do things with the portfolios. We won't make any kind of predictions, but we will kind of make sensible adjustments to bank gains as things go up and buy into things at relative lows, and hopefully they will then do better in the future as well. So all that remains to say is Happy New Year. Hope everybody has a happy and prosperous 2025, and we'll see you again next time. Thanks.